Welcome. This is Credo Wealth Management. I am Courtney Jones, Certified Financial Planner here in San Francisco. And I have the pleasure today to interview my dear old dad, who has been an investor for his whole career. This is Jim Lee. And tell me, how and why did you get into the investment business?
There was no real short answer. I've always had a little bit of an interest in the financial markets because, my interest in history. I was a history major undergraduate, and I went on to NYU to get an MA in economic history. So that was always there.
Okay.
I saw an ad in the Los Angeles Times. They were looking to hire an account executive. Merrill Lynch was the ad, and they're looking to hire a account executive for their Beverly Hills office. I went through the Merrill Lynch training program, stayed with them for about 3.5 years. I wanted to go into the institutional end of the business, which was just starting to open up in 1970.
So in looking back, what was the most challenging or stressful time for investing in your lifetime?
Every period of time is a challenge, but I think the more experience you have, the more you can refer to that experience and learn something from it. I would say that the current period is as difficult a time as I have seen. The Fed is walking that very, very tight rope again. Are they going to tighten and push the economy into a recession, which is normally the case? It's very possible. I have the advantage of having lived through a major inflationary period, obviously in the mid-70s through the early 80s. And we have some sense of how different assets perform in an inflationary environment. But I would say this period is, I think, very, very difficult because of the political backdrop, the dilemma of the Fed has at the present time, and we have in the last half dozen years, we have so many new investors who have come into the market who have discovered individual equities, and I'm not just talking about mutual funds and managed accounts. I'm talking about people that have come into the market. And the only thing that they have seen in the last half dozen years is a basically upward trending market.
Yeah, we've seen that too. From our perspective, I mean, in the last couple of years, it was so easy to be a stock picker. Everything went up. Oh, how do you keep up with market trends?
There's several answers to that, but basically it's reading as much information that I care to read, and after years and years and decades in the investment business, I built prejudices towards certain types of information that I think are more helpful than others. There's an awful lot of noise, as you know, in the investment business, so one should be selective. I start with the Wall Street Journal, and I think it's certainly the finest newspaper in the United States. And I used to read annual reports all the time, but I can go on YouTube now and pick and choose. So there's the availability of information is greater than ever. The delivery of that is easier than ever. But again, there's so much of it that one has to be disciplined in terms of what sources they think are useful.
How about can you tell us about what's the best and the worst investment you ever made?
That's hard to say. I mean, I could throw out names that, but they wouldn't mean that much. I mean, I would say I've made a lot of bad investments, and that's par for the course. I think any investor is going to have a bunch of bummers that don't work out. However, these can be wonderful educational experiences if one reflects upon it, what went wrong, what could I have done differently, and if an investor learns from it, then it's the best education that you possibly could get. We're fortunate we've had a number of great investments too. Most of them are just being patient, holding on to them. So I would say I've had Microsoft for over 10 years. Another company that we were very successful with was a biotech pharmaceutical called Celgene, which was acquired by Bristol Myers several years ago. Those are the kind of names that that tend to come to mind.
Who are some of the investment professionals out there that you most admire, and why?
Somebody like a Lee Cooperman, or a investors like that who again do their homework. They're very measured. They're not going for a home run every time they get up to the plate. They realize that time is their friend. I think those are some of the common characteristics that these investors tend to have.
And finally, what advice would you give to new investors today?
As difficult as it is, try to remain disciplined. Try not to panic. We talked about the influx of outside information that we're inundated with. This can jeopardize one's discipline. That you'll overly panic, or you'll overly be exuberant based on the last financial news show you saw. Behave in a disciplined fashion. So I think it's always good to look at all the opportunities, all the asset classes that one can put their finger on, and just go on the old premise that Mr. Market giveth and taketh, and we just look for what the marketplace is offering us. Is there an opportunity somewhere? And that somewhere is not only certainly in the U.S. equity markets, but it's in the emerging markets, it's in the currency markets, it's in the commodity markets, and then you have the whole fixed income markets, something that we've been keen on over the years is high yield corporate debt that are known as junk bonds. These can provide a very attractive surrogate to equities. They have a lot of equity characteristics, with some downside protection. However, going into the Fed tightening about 6 months ago, easy and cheap money offered by all the central banks was taking out the value in just about every asset class one could look at.
Yeah.
So I go back to the simplistic notion of what is Mr. Market offering us at this point in time.
Well, thank you so much for sharing your perspectives.
Well, it was my pleasure.
Dad.
All right. Have a great day.
Thank you. Okay, bye.
Bye.